Hi all, welcome to Navya Markets Limited. HCL Technologies is our latest funda tech call, which we have picked based on both fundamental as well as technical factors. HCL Technologies, as you all know, is a leading global IT services company offering integrated portfolio of services like software-led IT solutions, remote infrastructure management, engineering and R&D services, and BPO. The basic rationale behind picking this stock is that we're bullish on the IT sector, and this is due to the improving discretionary IT spend in the developed nations like US and UK, and also due to the increasing IT spend in the domestic economy. Based on these positive factors, the top tier IT players like HCL, TCS, Infosys were able to post strong numbers over the past few quarters. And among these players, HCL has been able to show superior performance. And if you see the quarter ending December 2010, HCL has outperformed its peers in terms of revenue growth as well as bottom line growth. The revenue has increased by 4.9% and net income rose by 20.7% in rupee terms for HCL for the quarter in December 2010. Not just that, the company has recorded a cumulative quarterly annual growth rate of 6.3% in its revenue over the past 4 quarters, which is a very decent growth rate. But in this process of increasing its revenues as well as bagging more contracts, the company has to compromise on its operating margins due to its aggressive pricing policies, and this reason has led to a decline in margins over the past few quarters. So now that the company has bagged more contracts and as the revenue outlook is strong, the management now has turned its focus on improving operating margins, and it has given a strong guidance towards improving the margins by using certain levers which it has in hand. And we also believe that the company will be very successful in improving its margins because of the levers that are available to it. If you see, the important lever is the employee utilization level, which is lower compared to its peers like TCS and Infosys. If the company could improve this employee utilization level, it can very well improve its productivity as well as the net profits. And one more lever which it can use is by reducing the selling, general and administrative expenses. If it could, these SG&A expenses are relatively higher compared to its peers. So if it could reduce these expenses, then it can very well improve its margins. So using these levers, we believe the company can very well improve its margins, and going forward, the company can see strong growth in its earnings. If you see from a valuation perspective, the stock is trading presently at a 23.6 times its trailing 12-month EPS, and this PE is lower compared to that of TCS or Infosys. And so, considering these cheap valuations and strong earnings growth outlook, we believe the stock is a very good long-term investment bet, and also recommend the same to the investors. These are the quarterly financials where the revenues have increased by 28% year on year, and the net income has increased by 34% year on year for the quarter ending December 2010. We have provided the technical levels necessary for you to take positions in the stock. From a technical perspective, the stock has surpassed the last 4 years hurdle at 360 in a decisive manner, and we believe this could fuel the stock to march towards the sky high of rupees 650 and 750. So based upon these factors, we advise investors to approach the stock level by level on a dip for a target of rupees 650 and rupees 750. And one more point you have to keep in mind is that below 360, I mean in the band of 260 to 360, the stock can experience a sideways pattern with positive bias. And below 260, it can turn to bearish, and so investors can exit the stock at that levels. Even from a technical perspective, the long-term view is very bullish. So as I said, from fundamental perspective, the long-term view is bullish, and from technical perspective also it's bullish. So we recommend the investors to consider long-term investment in the stock. Also, looking at the levels what we have provided below. Thank you.